Credit cards are powerful tools. They can help you build a strong financial future, but they can also lead to mountains of debt. It's like playing with fire. Used carefully, fire can warm your home and cook your food. Used carelessly, it can burn everything down. Credit cards are the same way. On one hand, credit cards offer convenience. You can buy things online and in stores without carrying cash. Credit cards also provide a safety net for emergencies. Imagine your car breaks down and you need a costly repair. A credit card can help you get back on the road quickly. However, credit cards come with a dark side: debt. If you're not careful, credit card debt can spiral out of control. High interest rates and minimum payments can trap you in a cycle of owing money. It's easy to swipe now and worry about the consequences later, but later always comes. The key is to use credit cards responsibly, understand how they work, and make a plan to avoid debt. You can enjoy the benefits of credit cards without falling into the debt trap. Credit cards are not free money. They're loans. When you use a credit card, you're borrowing money from the credit card company. You agree to pay back the money, plus interest and fees. Think of it like this. Imagine your friend lends you $100. You agree to pay it back next month, but your friend also charges you $5 in interest. So you'll owe $105 next month. That's how credit cards work, but on a larger scale. Credit cards come with different interest rates, fees, and rewards programs. Some cards offer cash back, travel points, or discounts. Others have high interest rates and annual fees. It's important to compare cards and choose one that fits your needs and spending habits. Before you get a credit card, read the fine print. Understand the interest rate, fees, and terms and conditions. Don't be afraid to ask questions. The more you know about credit cards, the better equipped you'll be to use them responsibly. Credit card interest rates can be incredibly high. This is especially true if you have poor credit. High interest rates make it difficult to pay down your balance. Imagine a snowball rolling down a hill. As it rolls, it picks up more snow and gets bigger and bigger. That's what happens with credit card debt and high interest rates. Credit card companies often require only a minimum payment each month. This might seem helpful, but it's a trap. Minimum payments are designed to keep you in debt for a long time. They barely cover the interest, so your balance barely shrinks. For example, let's say you owe $5,000 on a credit card with a 20% interest rate. If you only make the minimum payment, it could take you over 15 years to pay off the debt, and you'll end up paying thousands of dollars in interest alone. The best way to avoid the debt trap is to pay your balance in full each month. This way, you'll avoid paying any interest at all. If you can't pay in full, try to pay as much as you can above the minimum payment. Even a small amount can make a big difference over time. The best way to avoid credit card debt is to live below your means. This means spending less money than you earn. It sounds simple, but it takes discipline. Create a budget to track your income and expenses. This will help you see where your money is going and identify areas where you can cut back. When you create a budget, prioritize your needs over your wants. Needs are things you must have to survive, like food, shelter, and transportation. Wants are things that would be nice to have, but you can live without, like new clothes or eating out. Once you have a budget, stick to it. This can be tough at first, but it gets easier over time. Avoid impulse purchases. Before you buy something, ask yourself if you really need it. Could you wait a few days or weeks before buying it? This will help you avoid making emotional purchases you'll regret later. Using credit cards wisely is crucial for a healthy financial life. Treat your credit card like a debit card. Only spend money you have in the bank. This will help you avoid overspending and accumulating debt. Pay your credit card bill on time, every time. Late payments can damage your credit score and result in late fees. Set up automatic payments or reminders to ensure you never miss a due date. Keep track of your spending. Review your credit card statements each month. This will help you identify any errors or fraudulent charges. It will also make you more aware of your spending habits. Resist the temptation to constantly open new credit cards. Each credit card application triggers a hard inquiry on your credit report, which can temporarily lower your credit score. If you're already in credit card debt, don't panic. There are strategies to help you climb out and regain control of your finances. The first step is to stop using your credit cards. Cut them up if you have to. This will prevent you from accumulating more debt. There are two popular methods for paying off debt: the avalanche method and the snowball method. The avalanche method focuses on paying off the debt with the highest interest rate first. This saves you the most money on interest charges over time. The snowball method focuses on paying off the smallest debt first, regardless of the interest rate. This can give you a sense of accomplishment and motivation to keep going. Choose the method that best suits your personality and financial situation. Consider contacting your credit card company to negotiate a lower interest rate or set up a payment plan. They may be willing to work with you, especially if you've been a good customer in the past. Building a strong credit history is essential for financial freedom. A good credit score can help you qualify for lower interest rates on loans, mortgages, and even car insurance. It can also make it easier to rent an apartment or get a job. One of the best ways to build credit is to use a credit card responsibly and pay it off on time each month. This shows lenders that you are a reliable borrower. If you're new to credit, consider getting a secured credit card. A secured credit card requires you to put down a security deposit, which typically becomes your credit limit. This is a great way to build credit without the risk of accumulating high levels of debt. Check your credit report regularly for any errors or inaccuracies. You can get a free credit report from each of the 3 major credit bureaus: Equifax, Experian, and TransUnion, once a year. Remember, you are in control of your financial future. Credit cards can be powerful tools when used responsibly. Avoid the temptation to overspend and accumulate debt. Live below your means, create a budget, and pay your bills on time. Building a strong credit history takes time and effort, but the rewards are worth it. A good credit score can open doors to financial opportunities and help you achieve your dreams. Don't let credit cards control your life. Take charge of your finances and pave the way to a brighter financial future. You can do it. Please, like, share, and subscribe. Your subscription will help reach out to folks who needs more of this content. Thanks you. We appreciate your support.